Wait for the little thingy that, yeah, there we go. First on the agenda is agenda approval and announcements. Any announcements from board or staff?
Nothing from staff.
Okay, any need to change up the agenda? Nope. All right, I will entertain or look for a motion to approve the agenda. I see John and a second by Will. All those in favor of approving the agenda, please say aye. Aye. Any opposed? Next item is approval of minutes of the April 21st meeting. Any discussion, corrections on that from anywhere? I see Kim's joining now as well. Given that, I would look for a motion to approve the minutes of the April 21, 2026 meeting. Would like to make that? I see John and a second from Kim. So all in favor of approving the minutes from the April 21st meeting, please say aye.
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 Any opposed? All right. Public comment, I see nobody on Teams. Bill, I assume no one's hiding right under the camera in the room?
That's correct, Mr. Chair.
All right. Then I think we're gonna go to Tim and RVK.
Great, thanks, Mr. Chair. And so this is going to be our quarterly review of the municipal DC plan. There are two documents in your materials. The first is the Empower presentation. We're not going to walk through that because a lot of that information is in Sarah's presentation, but we just wanted to share that for reference. So I think with that, I'll turn it over to Sarah to walk us through the plan and investment review for the past quarter in the municipal DC plan. Thanks.
All right. Good morning, everyone. It's great seeing you all today. I'll start with a quick capital market overview before jumping into just a high-level plan update. And of course, please stop me at any time with any questions or comments you may have along the way. I will plan to keep it higher level though. So obviously, the first quarter of this year was a bit challenging. The main theme all over the news was the US-Israeli strikes on Iran. This has really hurt capital markets, equities, also bonds for a little bit as well, and really increased fears around inflation going up as a result of higher oil prices, but also fertilizers, probably agricultural commodities. It's really something that can hurt different commodities, especially in emerging markets. So that wasn't the only thing that was going on. Investors also were having new fears around AI's impact on valuations, especially large cap tech, where valuations have been really healthy and there are a lot of expectations of growing earnings. So that also hurt performance. You'll see that across the plan within your large cap equity, particularly any growth-oriented stocks were really hurting in Q1. On the other hand, if you look at small cap, however, it actually has been a lot more stable and held up pretty well in Q1, which is a bit surprising to some people, especially since small cap tends to be a bit more volatile. And the reason behind that is, despite everything that was going on in the news, we actually saw on the economic front, things have been very healthy so far, despite everything. Gross domestic product, GDP came in at 2% in Q1. Inflation still a bit higher than the Fed would like it to be, but was decent, around 3.3%. Unemployment still looks reasonable. So overall, the economy still seems to be humming along. Of course, there are a lot of expectations of inflation rising in the next few quarters, but definitely I think everything has been exceeding expectations so far. Even on the oil and gasoline front, prices have been much lower than expected. So hoping to see continuation of that trend. One DC update that we think is important to mention to you all, you may have seen this, but in late March, the Department of Labor issued a proposed rule clarifying how plan fiduciaries should think about selecting investment options and evaluating potential options for addition to the menu. The goal here was to kind of create a framework for evaluating alternative investments, including private investments or even alternatives like cryptocurrency potentially for addition to a DC plan menu. Obviously, most of our plans are not likely to add private investments or crypto in the near future, but it is still a very important piece of regulation if it passes in its current form, because there's a lot of discussion around just the high level of procedural detail that is in the current rule. So RVK and plan sponsors were all evaluating how we may look to support a more comprehensive documentation process for how we evaluate options as needed. Something else that could change after potentially the rule is passed is IPS updates or changes to investment policy statements are likely recommended as a next step, knowing adherence to the final rule as it comes out. So definitely a lot more to discuss in the coming months and quarters. The rule is still proposed with they asked for comments by June 1st. So we don't expect anything to be finalized before later this year or early next year. But we'll keep you updated, and definitely expect us to have a more robust discussion around this if and when it materializes and is final. So with that, if there are no comments or questions, maybe just a quick, just a plan update. My page is frozen here. So bear with me a second. So I'll share again, I think. Sorry about that. So hopefully you can see that. So just a quick plan update. As of end of March, and Ramik, if you can be on standby. Ramik, are you able to share?
Do you want me to share? I have it open as well.
Yeah, please. For some reason, it keeps unsharing.
Let me know which page you want me to go to.
Thank you. Let's start on page 17, please.
Second. Can you see my screen?
Not
Yeah,
yet.
looks good.
Okay.
Oh. Okay, yeah, I can see it too. Awesome. Thanks, Ramik. So as of March 31st, the plan had approximately $33 million in assets, a little bit less than end of last quarter. This dip is mostly driven by market performance during the quarter, as I mentioned, but there has been also some outflows, net outflows from the plan. Target date funds remain the dominant choice here, holding about more than 50% of assets and about 60% or so of participants. In terms of how folks are using the menu, maybe if we go to page 20 here, overall, we can say about 67% or so of participants are in what we would call a do-it-for-me options. That would be your target date funds, but also managed accounts or goal maker. Managed accounts usage uptick, so at an uptick slightly from last quarter, consistent with the trend that we've been seeing over the last few quarters. On terms of plan statistics, if we maybe go back up a page to page 19, we're showing here on the right, top right-hand side, just the number of participants and average and median balances over the last 4 quarters. You see that this is the second quarterly decline in the number of participants. So we're keeping an eye on that. But as you can see here on the left-hand side, this is a relatively mature plan. You see more terminated or separate participants in those older age cohorts, but overall you see less participants as you move to those younger cohorts. So there are more folks, nearing retirements or even retiring compared to folks joining the plans, new members, new employees with the state. So not expected to see some more outflows than inflows, which we see on the bottom left-hand side. Overall, also keeping an eye out, on managed account usage here on this page across cohorts. We're working on a review and we'll present the results to you all soon of that, closer, deeper dive into managed account and goal maker usage. But nothing significant or that has materially shifted compared to prior quarters that I want to mention here to you all today. If we jump to the manager monitoring dashboard, starting on page 21, overall, your fidelity target date options have been, doing really well. They actually beat their benchmark and most peers over the last 3 years and even longer time periods. And they have done pretty well, held up pretty well over the quarter, which we're really happy to see. If you turn to your core options on the next page, you can see that there are currently 4 managers listed here as on watch. One of the managers within the Active International and Global Equity sleeve, the Columbia Accord International. You remember we had a discussion around this manager at the last meeting, and you all have approved replacing them. And this replacement is currently happening. Staff already authorized the change, and we expect the new manager to be added to the plan, MFS International, in the first week of July. So more to come on that. So I'm gonna skip over this manager. There are also 3 other managers on watch. Domini, which is a U.S. equity fund, Domini Impact, Impacts Global, and State of Vermont Stable Value. We'll take a closer look at all 3 of them just in a short bit. So just overall, from a high level, maybe talking about the other managers. As you would expect, given what I mentioned about capital markets, U.S. large cap was a clear weak spot this quarter. And really, it has been challenging for not just your managers, but really most active managers in the large cap space to do well. Within international equities, managers have held up better. Fixed income was relatively flat. Like I said, the target date have done well, and small cap was a bit more mixed, depending on manager style. One manager actually that I would like to mention briefly, which is a small cap strategy, the Fidelity Small Cap Discovery, had a difficult quarter. It was down against the benchmark, and is as you can see here over the 3-year period, it's been in the bottom quartile of its peer group, underperformed the benchmark. This is a strategy that we think has a good management team. There has been a recent change on the team, but we expect the strategy to rebound. They tend to have a higher quality bias in their portfolios, and this has hurt them in the most recent rally within small cap, which has been driven by a lot of lower quality names, but they have generally done pretty well, provide downside protection, and sometimes they underperform in up markets, but generally expect not concerned that this point in time with their performance. Other than that, really steady as she goes with your managers, no concerns with any of them. That concludes my performance comments. I'll pause to see if there are any questions on your managers or markets before we give you all just a quick watch list update. One of the three managers actually want to spend a bit more time with, which is the State of Vermont Stable Value Fund, where we have an update for you all. So with that, maybe Ramnik, let's turn to page 63 for the watch list. Starting with Domini Impact Equity Institutional. This is a US large cap strategy. As a reminder, this one has been on watch since the third quarter of last year, driven purely by performance challenges, which has, in recent periods, which has really hurt their long-term results. It's a concentrated strategy that integrates ESG criteria, so it can be more volatile and will have slightly higher tracking error relative to peers. Nothing has changed over the last quarter. It has been, like I said, challenging for managers in general to do well this quarter. So we are keeping an eye on that strategy and do hope to see them rebound, especially as we start to see broadening in performance this year, where we're seeing more and more companies outside of the narrow large cap tech sector doing well. So hopefully they will take advantage of that, and we'll see a recovery in their performance soon. But nothing to update you on with this one. The next strategy is Impacts Global, also an ESG-oriented strategy. It has been on watch also starting in the third quarter due to performance challenges as well. But there has been a team change that we want to update you on, that we learned about in recent months. So in the first quarter of this year, 2 of the 3 lead portfolio managers on the strategy departed. You may recall that end of last year, there was actually also one of their 3 portfolio managers has also left. So which means now at this point, we've had a full turnover on the portfolio management team. This puts the strategy at a higher level of monitoring, because it means that the prior track record is not very relevant going forward, even though we still have conviction in impacts as a firm and we have no concerns with the current team, but we think that's another reason to take a closer look at them, make sure they do well going forward. They certainly have done well, at least in this quarter, which, as I mentioned, has been somewhat of a challenging quarter overall. So with that, maybe want to spend a few minutes on the State of Vermont Stable Value Fund, which is managed by Mission Square. Plus, as you may recall, this manager's performance has actually been pretty well. And as you can see, compared to the benchmark, here it's performed in line with expectations. And so their placement on watch had nothing to do with performance. It was about organizational and investment team changes that happened over the past 2 years, where Mission Square has experienced significant and multiple consecutive leadership turnover across both the investment team and the firm leadership as a whole. So that's a reason to be concerned. And we've had several conversations with the team since then, and over the last 6 months. One of the most recent conversations actually was just 2 weeks ago. And while we really appreciate the discussion and the continued leadership and trying to make changes to improve things there, we still have some remaining concerns around how the team is managing that strategy and expectations going forward. And we're not fully confident that there will not be additional turnover based on those conversations. So, and we also use that discussion to learn more about the mechanics of what an exit from the fund would actually look like. And we were happy to learn that everything would go smoothly in line with expectations. Their standard process, Mission Square, as other stable value managers do, requires a 12 months notice ahead of liquidation. So if we give them notice now of intent to redeem, if we want to get the book value of the investments in the strategy, meaning dollar in, dollar out, this can be guaranteed if we liquidate 12 months from now. You can liquidate anytime, but that you could potentially lose some value since market value fluctuates with interest rates, and given where interest rates were, market value is currently at a bit of a discount to book value. So if you want to get that full book value, you have to wait 12 months. That's standard process. Everything else, we probe them on all the technical details, and no immediate concerns there. But given the continued organizational uncertainty and all those concerns that we still have, staff and RBK discussed this, and we think it's prudent to issue a formal 12-month notice to Mission Square to share our intent to redeem. Now, this doesn't mean we are looking to redeem. A redemption notice is not binding, meaning in 12 months from now, if we do not confirm the redemption, it expires basically, and it can be rescinded any time before then. So there is no obligation to follow through with a redemption. But we think, given all of those concerns, it's really good to keep our options open while we complete our due diligence and monitor the strategy a little bit more, so that if 6 months from now our concerns are more serious and we would like to actually pull the plug, we will be able to do that in a timely manner. So our VCAM staff, we're not recommending redemption. This is more of an operational step that we want to be transparent with you about, get your feedback on, but it's not an action item for you all because we're not recommending any changes. So I said a lot here, so I want to pause, see if Tim wants to add anything, or if you all have any questions or comments on that.
And I'll just jump in that this seems, from our perspective, to be, like Sarah said, a prudent step, but it really just allows us to get in line while we continue to do our due diligence and monitor this fund. There's sufficient changes going on organizationally to justify kind of preserving our options at this point. But it, again, as Sarah said, it doesn't commit us to anything, and it just allows us to move more nimbly if we do continue to have concerns given all the change of the organization. So this is by way of heads up, but also to allow for any conversation or comments if anyone has it.
Any questions from the board?
Is this, I guess, because this is the only one with a potential imminent action except the one that we had approved before, right? Yeah, or no? Yeah. When these things happen, is it seamless to the participant if in this, when out for a new provider, we find the same category and then it's seamless to the participant, right?
Yeah, like that's what the one we just did. It's we have a new fund that everything is going to be mapped to, and it's a pretty common process for Empower where they have their forum notifications and let people know what's going to happen. I think the one we've just changed, there's only a handful of people in, but it's meant to be seamless. And of course, members can always, once given this notice, say, no, I don't want to be in the new fund. I want to be in whatever I want to be in. I would say that's probably the rare occurrence that someone would not default into the new fund. But
Do
it's
we
meant
know,
to be
like,
easy.
if this one, is it more than a handful? Do we have, we probably do know the assets that would be affected, right?
Yeah, that'll be up
Let's
on
see.
page, where is it?
There,
There's about
Page-
1.6 million.
18, yeah, page 18 on the right-hand column. We have about 124 participants with 1.6 million in assets.
Okay.
So this one would be bigger, but again, this is the only fund that we have that requires this 12-month lead time. It's a unique thing because this is almost more in the nature of an insurance product than a meant to preserve value as opposed to a traditional investment. So when we decide we want to move from a traditional fund, we make the decision. It's a couple months process, with the notifications and whatnot. This one being a little different, we thought it just made sense to get the umbrella out now in case it is in fact a rainy day down the road.
Thank you.
Well said,
So
thank you.
given that 12-month lag time, if we decide to move away from this fund in the future and a handful of people say they want to stay in that, like, is that I would think that would be a bit of a management nightmare if we still would have to track a new 12-month notice for them if they were deciding to leave in the future. Or am I kind of not understanding how that would work?
Yeah,
Sarah, do you
so
wanna take it?
typically, yeah. No, I was gonna say, so typically, the notification would give participants an opportunity if they want to move to another option on the menu. But typically plans would map any other funds to the new option at the time that's announced, as opposed to keeping both options open, because like you said, it can be done, and but it's an operational nightmare. It's going to be a bit confusing for participants if they see an option on the menu that is not available to new contributions. And I think from the participant perspective, what we've seen in the past is participants are not really wedded to a certain name, like they want to stay in the Mission Square managed fund. They are interested in an asset class, having that type of exposure. And if they know that the new fund they are mapped to will have similar experience, similar objective, and it was vetted by the sponsor, like Tim said, most folks are generally happy to have their assets automatically mapped to the new fund, so we don't expect any meaningful disruption or concerns.
And is that is the intent to redeem notice, is that something that's public?
It's public.
Not,
Or- It's public in the sense that this is a public meeting and we're informing folks of it, but otherwise it's an operational step that's just a direct
Okay.
communication from us to the manager.
So as we're looking at this fund, it's not like we have access to, we know that there's however many millions of dollars elsewhere that have put in their intent to redeem. That's not a metric that we have access to.
I think the more important sort of metric on that front, Morgan, what I'm hearing in that is sort of like a concern that there may be a rush to the exits or something. But I think that's why Sarah and team have been having conversations directly with Mission Square to understand what the picture looks like now. And as she said earlier, there's no concerns about us being in a place to have, dollar in, dollar out for if we give our notice at this point. So not a concern to us at present. It's more, if we continue to monitor this, say another like 3-6 months, we'd rather be in a position to make the change quickly as opposed to then trigger another year waiting period. And then by the time we're getting our money out, it's, we're pretty far away from when the board has made its decision.
And I was going to say there are about $9 billion in the strategy. This is something we definitely check in. So there are $9 billion in the strategy across all the supplemental Vermont plans. There are about 100 million or so in assets. You all don't represent significant portion of the fund, and they deal with those types of events on a regular basis every month. And we've actually received a lot of data from them on, their queue, their current plans that have not even noticed flows over the last few years, and we have a good picture of the liquidity of the fund, and we really have no concerns like Ken mentioned.
Okay, thanks.
Well, great questions. Anything else on this, or any other managers on the plan, or anything else we discussed today? All right. Well, thank you all for your time today. Great seeing everyone, and yeah, we'll talk again next quarter.
Thanks, Sarah.
Yeah, thanks both. Okay, we will now turn it over to Tim, first for the election update.
Great, and this is a quick one. We are going to have an election on the employee side. We received 2 nominations for employees as of the deadline, which was last Friday. We only received 1 nomination for the employer side. So I'm forgetting the gentleman's name at present, but we'll bring that to you next meeting to address. But so yeah, one of from the notices that just went out, just want to let folks know that we will be having 1 election on the employee side. That's really all I have on that. Just wanted to keep folks abreast.
Any questions on that? I think you can stay through to the legislative update then.
Yeah, and this is a quick one as well. I think the sort of breaking news as of today is that it does sound like the Senate had previously included our position in their version of the budget, and conference committee was meeting today, and it sounds like the House has come over to that position, and so that is a very encouraging sign. It sounded like maybe they were tied to some other positions, but it was all very encouraging that the tenor of the discussion was favorable to our new position. And a comment that the chair of House of Probes made was that the letter of support, sort of memorializing the 3 board support for that position, was persuasive. So I wanted to thank folks here and for the discussion earlier in the session. That I think that has helped us kind of move the ball forward there. The VPIC position, as I know this board is also interested, has remained as well. Our omnibus bill that has things like our amortization task force and how we manage OPEB, that is moving forward. I think it's kind of slowed down a little bit at the end here, but we're still hopeful and confident that it's going to make it across the finish line. So, you know, all in all, for the systems, I'm viewing that as a very positive legislative session, though, as always, careful not to count our chickens before they're hatched. David, anything else that you got on your end, or?
No, that summarizes it. Good news today, and we'll hope it sticks through the very end here.
Yeah.
Sounds good. Yeah, it's constantly on every screen here in the office, different committees.
Yeah.
In the floor sessions.
Morgan, I don't know if you're seeing anything on, because I know both Morgan and Kim, you're following the education bill very closely. But from initial review for me, it doesn't seem like any pension system direct impacts. Of course, you know, if X, Y, and Z happen down the road and, you know, the workforce changes, obviously there will be impacts on the pension system, but nothing that I'm seeing from the education transformation, at least in its current form, that is flashing any warning signs at the systems. I don't know if is that consistent with how you guys are seeing it?
Yeah, I haven't seen anything, so just there's always a general fear in the last few weeks of the session, but
Okay.
nothing that I see coming.
I agree. I not, you know, it remains to be seen. A forced condition might result in a different outcome, but or a veto
Yeah.
session or whatever might come after what is likely to be a buckle up version of conference committee, but we'll see.
Yeah.
Okay, any other business to come before the board? Anything from staff?
Yeah, the one thing I wanted to point out, we put in the last, well, 3 years ago, experience study that we did. And we just put that as materials. It's not obviously anything we're taking up this month, but next month we expect to have our experience study for this most recent 3-year period. And kind of wanted to just refresh folks from what we did last time around. If you recall, the experience period when we were looking at this was pretty COVID heavy. And so we were, I think, being reasonably cautious about making any sudden moves in our experience study. And as you see from the study I put in there, there's some small additional liability, but nothing really material, I think, reflective of the fact that we were moving slowly. I don't expect huge wild moves in this experience study coming up, but we will probably be recommending some changes to increase the inflation percentage. That's a economic assumption that VPIC holds, and VPIC is going to be meeting next Tuesday to address those. I think based on what the actuaries presented to us the first time, it does seem like there will be some increase there, sort of still figuring out exactly how much, not expecting the assumed rate of return to change. So, in that sense, that's kind of a relief because those can typically have outsized impacts on liabilities and annual required contributions. The other big one that I'm kind of expecting to see is retirements. I think our assumption there has been maybe a little too conservative, and we might need to, or too aggressive. I can never remember which way it goes. But it's presuming fewer retirements than have actually been happening. So that's likely an area that we're probably going to tighten up as well. The upshot of this will be some additional liabilities I would expect to come out of this experience study, and but nothing that, at least from what I know now, is going to be like it was back in 2020 when we did the big one and brought down the assumed rate of return 50 basis points, and that then kicked off 2 years of pension reform discussions over in the legislature. That is not what we are expecting at this point. So take a look at this. It's probably helpful to refresh what happened last go round, and I think at least for a few people on this board, this will be your first experience study. Happy to talk about it in advance too if you have any questions, but this is just for sort of background and context heading into next month, which might be a bit of a longer one, given that the experience studies are kind of a big lift. So we'll make sure to revise the meeting invites, put more time on your calendars just to kind of hold the window. And that's all from us. Happy to answer any questions.
Okay. Any other business from board members? Seeing none, June 16th, next meeting. And then November is when we're planning on being the long shared carousel meeting.
At this point, I have fall. I'm going to figure out whether that's October or November, and kind of I need to talk to the actuaries about valuations, and but I was thinking it'll be sometime in the fall, and I think maybe following, VPIC does the spring in-person meeting, and I just had a chance to participate in my first one of those. I thought it was really helpful. Thinking kind of doing the once a year in person might be the right cadence here. And so, all I got for you is fall right now, but we're gonna be kind of charting that out over the next month or two.
Sounds good. Well, plan to see everyone virtually next month. And with that, I would love to see a motion to adjourn. I see Kim and a second. We'll give it to Will. All those in favor, please say aye.
Aye.
And we are adjourned. Thanks all.
Thanks, folks.
Little
Aye.
time back today.
Yeah.
Thanks, folks. Bonus. Take care.